Okay, so the exam 2 review sheet, I want you to go through, know the information that's on this sheet, because that is where the questions are going to come from. So first we have prime cost and conversion cost. Know that prime cost is direct material plus direct labor. Conversion cost is direct labor cost plus manufacturing overhead. And the questions that come out of that might ask, direct material is part of prime cost or conversion cost, or it could be a true false question, or it might say, is the direct materials part of prime cost and conversion cost? So just know what that is, because there will be different questions that pop up. Also know how to do a calculation. If it wants to know what prime cost total is, and it gives you a list of amounts, you'll have to be able to add those up and be able to give that information. So those are the types of questions that can come out of that. All right, then we have cost classifications for preparing the financial statements. So we learned a lot in principles about financial statements and how we bring over our revenues and our expenses over to an income statement. And also, how do we record inventory? How do we record costs? So you need to think back on some of those things that we covered in the review, that know, okay, so if I have a cost, that's something that is part of like a product or an inventory, an asset. And I'm going to have different costs that are associated with that product. And this little information here is just telling you that the product costs include raw materials, work in process, finished goods, and I have some examples of what those product costs could be. So we have salaries of management, we have insurance on the factory, we have equipment and rental costs of factory equipment. So anything that has to do with the equipment that we're using in the factory, or any costs associated with that equipment, that is all going to be added into that product cost. Obviously, the raw material, that's, your direct materials that you're using to bring into a product, but you don't always take those materials and just be able to sell them. So in a production, you have multiple raw materials that come in to produce a product. And what happens is you will have labor as well. So those people will come in, they'll have to do some labor. So you'll have some work in process with materials, and you'll have work in process that will also bring in your labor. So know that your product costs, just for the products themselves, are going to be in the work in process. Then you're going to have finished goods. So once you put it all together, what comes out of that? Now I've put this together. I had some raw materials, I had my labor, and now I'm going to pull that over and bring it into a finished production that I can sell. So think about a car. It goes in with all the materials. When you finish a month, you don't always finish all the cars that you started to build. So if you want to think about that process, that may help a little bit to understand some of the information that you're learning. In the end, you're going to end with a car, and some of that is going to be finished at the end of the month. Some of it's still going to be in work in process. All right, then we have period costs. So anything that's dealing with your administrative or your selling, that's going to be your period costs. These expenses will be on the income statement under the operating expenses, and they'll be expensed in the period in which they incur. So in principles, you learn that we want to try to match the cost or the expenses when we're actually selling the products or services. And so there's no difference here in a production facility. You're going to do the same thing. You will have some of those period costs that are going to get added in, so because they were part of the production at that point in time to sell the products. So you'll have to know what your period costs are. And then we have cost classifications for predicting the cost behavior. So we have some costs that are variable costs. What does that mean? It means that it's varying. The cost is going to vary in total. So the proportion to changes in level of the activity. So obviously the cost is going to change depending if I have like a cost per unit or whatever, a cost per something, and that changes depending on how much am I doing in production. And then there's fixed costs where it doesn't matter how many I produce, I'm going to have to pay that cost. That cost is not going to change. If it remains constant and it doesn't change regardless of how many how much activity I have that month, that's a fixed cost. And then you have a mixed cost, which contains both the variable and the fixed elements. So you'll have something like a utility bill, for example, could be something that is variable and fixed, depending on how you have your utility bill broken out, or what is that meter for. So you can have both in one. And then we have the equation, y equals a plus bx. So know what each one of those represent. Know that the y equals the total mixed cost, a is the total fixed cost, b is the variable cost, and x is the level of activity. Now, you have to know what those mean, also know the formula, the equation itself, and how to pick out a number and plug into that formula in order to calculate what the question's asking for. So you'll have to know which one's which, so when the question gives you some information, you know where to put those numbers. Okay, so know both, know what they mean, and also know how to calculate it if they give you some numbers. We have the cost classification for decision making. So we have differential costs. It's the difference in the cost between two alternatives. A difference in revenue between two alternatives is called a differential rate revenue. So both are always relevant to the decisions, and differential costs can be either fixed or variable. So it could be either or. Then we need to know how to compute our predetermined overhead rates. So sometimes we'll pick out a number in the beginning of the period, and we will say this is what we're estimating that we're going to have as our predetermined overhead rate, and we use that throughout the period, and then we can compare it to what actually is happening. So sometimes we may overestimate and our actual costs are maybe lower than what we estimated, and sometimes it's the reverse. Sometimes we have more actual costs than what we predetermined, and that will happen. It varies. It depends on what information you have that you're looking at to come up with those estimates. What happened during the year that maybe disrupted production or increased production? So sometimes things can change along the way, but we need something to help with a predetermined overhead rate, and we use an estimate to calculate that. So some of the problems that you have on the review are calculating that out, and we'll walk through those problems just to make sure you know how to work them out. So the predetermined overhead is calculated by dividing the estimated amount of manufacturing overhead for the coming period by the estimated quantity of the allocation base for the coming period. So you want to know that that formula. You want to make sure you know that it's the estimated amount of overhead over the estimated quantity, because you could have a question that's asking about the formula itself, or you could actually have some calculations with numbers that are given to you to work through the problem. Then we have predetermined overhead rates, and they're often used because actual overhead costs for the period are not known until the end of the period. So obviously we don't know what our actual costs are going to be until we actually go through the period and we see what did we use, what happened, how many orders came in, what did we do in our production line. And it inhibits the ability to estimate the job costs during the period. So we will come up with that predetermined amount. And then we have actual overhead costs that can fluctuate seasonally and can mislead decision makers. Okay, so just know that information in case you have a question that comes out of that. We have raw materials, which we talked a little bit about. So that's the materials that are going to be brought in to produce a product. So raw materials are purchased and they're recorded as a raw material inventory account. Do you remember what an inventory account is? Inventory is what? It's an asset account. So if I'm purchasing raw material, my assets going on my books as inventory, and so that means I'm debiting my inventory. My credit side would be cash or accounts payable if I'm paying for it later. but I want you to kind of understand the flow of what's happening with the materials and with the labor and what's happening on the financial side as well. So we have some raw material. We bring that in. It's considered inventory. That's an asset. We're going to be able to use that to produce something that's going to benefit us in the future. So we have our raw material. And then when we take the raw material off the shelf to bring into production, that's considered our direct material. And those costs are transferred out of inventory into work in process, because now we no longer have them waiting on a shelf. We've pulled them out so that we can produce a product, and we need to record it as a work in process. And it stays in work in process until there's an end finished product, and then it gets moved out. So now we have a work in process account set up because we pulled some materials in. Well, what happens? A lot of times we have to use that material, and with people coming into play, right? They have to come in, they have to put the materials together in order to create the end product. So we transfer the direct labor costs also, and we add that into the work in process. And it'll stay in there until the product is finished. So we have our direct materials and we have our direct labor that's going in. Then we have our manufacturing overhead costs, which we apply also to the work in process. So once we have all three of those in the work in process, and then the products are finished, we can move everything out at one time. So everything goes into work in process. It's staying, all of it's in there as a debit. It's in there for my work in process. And when the job's completed, when I go to move it out, I'm going to take the cost, I'm going to transfer it out of work in process, inventory account, and then I'm going to transfer it to finished goods. So everything comes out of work in process that's completed. That doesn't mean work in process is now zero. It just means that I have some material labor that went into this product and I have a finished good that I'm pulling out, but I still have some that are in the process of being finished. They're not finished yet. So you'll have an ending work in process. So once they're finished, they go into a finished goods inventory. Now I have a product that I can sell. So again, it credits work in process and it debits the finished goods inventory. So I moved it now into an inventory account, and those are the products that I'm going to sell. So when I go to sell it, I would clear off my inventory and record my sale. So just understand that process of what's happening, how it flows through the work in process. Know that your inventory is an asset account. Okay, so then as the goods are sold, those costs are transferred out of inventory, which is your finished goods, to cost of goods sold. So we learned about cost of goods sold as well in the principles class. Those costs reduce your revenue. So we'll have a sale of a certain amount, and hopefully the cost is less than what that sale price is. So I reduce the revenue by the cost of goods sold, and that gives me my gross profit. Then I can subtract out my operating expenses and get my net income. So I'm moving it out of the finished goods inventory, and I'm going to cost it out at that point in the cost of goods sold. And now it's out of my inventory altogether, and it's sitting in a cost of goods sold account, which is going to be a debit. It's going to be reflected on the income statement. Then I have period costs. They're not going to flow through the inventories. These are the ones that we talked about. Those period costs are going to get expensed right into the income statement for the period in which those expenses incurred. So they're recorded as an expense on the income statement and the period incurred. Okay. All right. So know all of that, because there's going to be some questions that come out of that. I want you to understand the flow of what's happening with your raw materials and your direct labor, your work in process, to your finished good. And then when you sell it, your finished goods, what's coming out of inventory. So in your previous class, you learned about cost of goods sold. You learned about merchandise where you're selling that inventory. And we learned how to do the journal entries for that, how to do a financial statement with that. And this is just kind of giving you a little extra step. Now you're actually producing the product that's going to be sold from your finished goods inventory account. So we have to understand the work in process piece. Okay, do y'all have any questions so far?
No, ma'am.
Okay, let's look at connect, practice problems. Let's walk through them and make sure you don't have any questions on these. Okay, so here we have a list of the direct materials, direct labor, and this goes back to what I was telling you on your sheet, that if they give you a list and they say what its conversion cost, you have to know which ones on my conversion cost. So if you memorize this, you'll be able to calculate the answer. Let me move this off the screen. So our conversion costs are the direct labor and our manufacturing overhead. So we would just have to add those two together. So we have our direct labor for 33,300, and we have our manufacturing overhead 30,008. Add them together, and that's my conversion cost. So that should be easy enough to figure out. Okay, here we have information that has the number of units. So there's a little bit of calculation that we're going to have to do in order to figure out what they're asking for. So we have a relevant range of activity that's 3,000 units to 7,000 units. When it produces and sells 5,000 units, its average cost per unit are as follows. So it's given us a list of what the costs are based on 5,000 units. So you have to keep that in mind when you're doing your calculation. So it says if 6,000 units are produced, the total amount of indirect manufacturing costs incurred is closest to. So it's not asking for the exact, it's asking closest to. All right, so how do we calculate the manufacturing overhead? So we have to take our variable manufacturing overhead costs. So it listed out right here. Variable manufacturing overhead is $1.30. It's telling us 6,000 units are produced. So we're going to just multiply the 130 by the 6,000 to come up with the answer, which is 7,800 in this example. And then we're going to look for our fixed manufacturing overhead, which they are telling me is $3. And so over here, you'll notice that I am pulling not the 6,000 units, but for my fixed manufacturing costs, I'm pulling the $3 times the 5,000 units, because it's telling me that when I produce the 5,000 units, this is what my average cost is going to be for the fixed. So I'm going to pull 5,000 times the $3, calculate that out, get my 15,000, and then we just add them together to come up with your indirect manufacturing cost. Okay, so just know what units you have to pull in, and then what cost are we using, what average cost are we using per unit in order to figure that out. Okay, we have the following costs incurred in May. So we list them all out, and it says, what are my prime costs? So our prime costs are the direct materials and direct labor. So I just pull them off my list, add them together to come up with my answer. Here's our formula. The y equals a plus bx. So I have to know what's what in order to be able to calculate it out. So I'm given y equals 16,000 plus 340x. The total for the activity level of 4,000 units would be, well, what does the x stand for? The x,
That's the units.
That's the units, right?
Yes. Yeah, so 4,000 times $3.40 plus the 16,000. That's it.
Yes, that's it. Yep, you just plug that number in the x and then calculate it out. Yep. Okay, here's another one. So we have 7,000 units this time. And so we're just going to plug in our 7,000 units for the level of activity, multiply it by how much it is per unit, and then add the fixed 23,000. I'm sorry, the Yeah, the fixed cost, sorry. Okay, now we have another list. So it says the corporation uses a predetermined overhead rate based on the direct labor hours. So it's telling us what they use, the direct labor hours, to apply manufacturing overhead jobs to the jobs. The corporation has provided the following estimated costs for the next year. So Jameson estimates that 2,000 direct labor hours will be worked during the year. So the predetermined overhead rate would be, so we got to figure out what goes into that manufacturing overhead to come up with that predetermined rate. So we have to figure out, remember the formula for the predetermined rate was the estimated amount of the manufacturing overhead divided by the estimated quantity of the allocation. Well, we don't know what the manufacturer's overhead is yet. We have to calculate that out first. So what goes into manufacturing overhead? We have to bring in the rent on the factory building for $15,000, depreciation on factory equipment, $8,000, indirect labor, $12,000, and then we have the production supervisor's salary, $15,000. So notice that it all has to do with the factory. Okay, so the factory equipment, the depreciation, and I think we went over that a little bit on the examples. I can't remember. I thought we had gone over that a little bit. But anyway, so you want to make sure you know which one of these goes into your manufacturing overhead to come up with that number. So we have our estimated number at 50,000. And then we're going to divide it by, what are they estimating? They're estimating it to be 20,000 direct labor hours. So it's just the 50,000 divided by the 20,000 to come up with $2.50 per direct labor hour. Do you have any questions on that one?
So expenses are, it's expenses plus labor plus material.
You only want to grab the
Because it says like rent on factory building.
right, you want to grab what is related to the factory itself. So the rent on the factory building, depreciation on the factory equipment, and then who's the supervisor? They're going to be, it's the production supervisor. So he's down on the production floor in the plant. So you want to grab him, and then you also need to pull in your indirect labor. Okay, so that's what goes into the manufacturing overhead. Just those items, add them up, and whatever that amount is, that's your manufacturing overhead. Then you divide it by the 20,000 that we're estimating, because remember, it's the estimated manufacturing overhead divided by the estimated activity, the quantity of the activity. It's telling us the activity they're using is based on the direct labor hours, and that's why we're pulling that 20,000. Okay, Pervs Corporation is using a predetermined overhead rate that was based on estimated total fixed manufacturing overhead of 121,000 and 10,000 direct labor hours for the period. The company incurred actual fixed manufacturing overhead of 113,000, 10,900 total direct labor hours during the period. The predetermined overhead rate is closest to, what is it asking me for? Right here, it's saying predetermined overhead rate. So remember, that is always estimated. We're not going to use actual. They're telling me what the actual is, but I'm not going to need the actual because I need to know the estimated in order to come up with my predetermined rate. Okay, so the total factory manufacturing overhead is 121,000. That's my estimated. And then my level of activity, they estimated, they give it to me, 10,000 direct labor hours. So I need to divide that, right? That's my formula. My estimated manufacturing overhead divided by the level of activity, the estimated level of activity. So the 121 divided by the 10. So don't let it confuse you that it's asking for actual. I mean, it's giving you the information on actual. It's looking for the predetermined rate, which always uses estimated. Okay, Dearden Corporation uses a job order costing system with a single plant-wide predetermined overhead rate based on machine hours. So tell me what it's basing it on, machine hours. The company based its predetermined rate for the current year on the total fixed manufacturing overhead of $144,000, the variable manufacturing overhead of $2 per machine hour, and 60,000 machine hours. The predetermined overhead rate is closest to. So we need to calculate it again. Remember, it's going to be the estimated total fixed manufacturing overhead plus the estimated variable cost. And then we have to make sure that we use that estimated allocation base that, that they're giving us of the 60,000. So we're going to take the 144 and we're going to add it to the $2 times the 60,000. So it's giving me the 60,000 machine hours, and we're using those because that's what they're basing that estimate on. They're basing it on machine hours. So I have to take that and multiply it by what was the variable cost to come up with what it is for the 60,000 hours. So I take the 60,000 times the 2 to get 120,000, and I add that to the other amount that they gave us already, which was the fixed manufacturing overhead, which is 144,000. So I add those together, and then I divide it by the estimated machine hours. It gives it to us, 60,000. Okay, so it's doing the same thing. It's just laid out a little bit different than the other problem, but it's basically doing the same thing. You have to calculate it out, come up with that estimated manufacturing overhead. Once you have your amount, then you take that amount and divide it by the estimated level of activity. So we have the 264,000 when we add them together, and we divide that by 60,000 to come up with the 440. Okay, the assembly department started the month with 24,400 units in its beginning work in process inventory. An additional 309,400 units were transferred from the prior department during the month to begin processing in the assembly department. There were 29,400 units in the ending work in process inventory. The assembly department how many units were transferred to the next processing department during the month? Okay, so we got to look and see how many were completed and then how many did we transfer out. So we started with 24,400, and then it says we had an additional 309,400. So if you take the 24,400 and add the 309,400, so now we have those total units available. So we had the beginning balance plus we had more that were transferred there. So we have the 24,400 plus the 309,400. And then how many did we have in the ending work in process? We had 29,400. It tells us that. So we have to deduct those out because that's what we had left. And that'll determine how many units were transferred out, right? So we got to figure out what is available, what did we have left, and just deduct it out, find the difference, and that gives me what was pulled out, what was transferred to the next department. So the 24,400 plus 309,400 less the 29,400 gives me the 3,044. Okay, beginning inventory plus my additions. Then I need to take out what was transferred out to get my ending. They didn't give me that number. They didn't want the ending inventory that was left in there, the units. They told me how many was left. So I still need to get the difference to figure out what was actually pulled out.
So the 20, I'm just curious, the 29 is from what? Another department?
No, that's the one. Okay, so you have a total of the 24,400 plus the 309 is.
Right, I know the 309 was a transfer from a department.
Yeah,
So, but I understand like the calculation stuff, but why need for subtraction? Why are you taking out 29? Because I guess
because
it belongs some in some other
no,
unit.
that's what's left in there. So you have your assembly department that you started with 24,400 in that department. You added additional 309. So that's why you had those together. So you have a total in the assembly department of 333,800. Okay, you add them together. So they want to know, the question saying, how many units were transferred to the next processing department for the month? So I need to know, what did I transfer out of the assembly department? And it doesn't give me that. It's asking for that. But what does it give me? It tells me what I had left in the assembly department. So out of the 333,800 that were available, I only have 29,400 left in the assembly department. So you have to deduct it to get the difference to know what came out and went to another department.
Oh, I understand now. Cause yeah, like I understand when you go to another department, they have their their materials that and then
Right.
they credit work in process, and it goes to the next. I've seen it when during the homework, it was
Yeah.
set up like that. It would be
Right.
material when you
Right.
credit, and so on to the next department transfer. I
Yeah,
get it.
because you might have, go back to a car production. So think about it. You have all these parts coming in, and there may be an assembly department. Maybe they have to assemble, let's say, the door. And so the door isn't the whole finished product. It's just a piece of it. So that department, that assembly department is going to be getting all these, parts in, which is inventory. They're going to be putting them together. And when they're finished, then that good needs to go to maybe another department to get put, maybe it's welding, to get welded onto whatever. So you have different departments doing different steps in the process to get a finished good. And that's what this problem is about. It's just saying that you have this many in this department, and now I need to shift some over because some doors were completed during the month, but not all of them. Only
So
some.
the last department to process a finished piece is the one that gets the credit on the ending statement.
Correct. So they'll stay in, it depends. It depends, because sometimes it gets complicated, but there is work in process. So it's all work in process until it's completed. So if you look at work in process as let's just say it's like one department with all these different departments within it. So everything's in work in process, right? So it's still going to be sitting as your debit. Now, if you have it broken out, and let's say you have different inventory accounts for different departments, then yes, you would credit out what's moving to a new department. You would credit out a work in process as at assembly, and then you debit a work in process in another department. So now it's in this work in process over here. And then when it's finished, when the final product's completed, you will credit work in process, and then that's when you debit your finished goods. Does that help?
Yeah, it gives a better understanding. I'm just trying to see how it moves, in a workplace. Yeah.
Yep. Okay. I've never worked in a production, but we do have a lot of plants around here, a lot of chemical plants. We have, oil and gas. So there is potential that people in our area will end up in, some sort of plant. And, we don't have any car plants here in our state, but we do in the United States. And so it is possible, not as likely that we would work for a plant, but my husband works for a chemical plant. And so, so sometimes, when I lecture in class on this stuff, I'll bring in, what's happening like at his plant and how the chemicals move around. It's the same thing. They have, they're using fluids, and those fluids get combined. And then sometimes there's, byproducts that come off of it. And sometimes those things that are mixed together go into a finished good that they can now sell. So it's possible you could be working with something like this in our area, because we have a lot of plants. Okay, so we have Clinics Labs Inc. uses the weighted average method in its process costing system. The following data are available for one department for October. So we have a work in process. It tells us the number of units on October 1 and then on October 31. And then it tells us what percent is complete for materials and for the conversion. So the department started 398,000 units into production during the month and transferred 410,000 completed units to the next department. Compute the equivalent units of production for October. So maybe I need to add that to the review sheet, how to calculate that out. All right, so here's our weighted average method down here. It gives you the calculation. So we have materials and we also have conversion. All right, it's telling us that the transferred units are 410,000. So I know that 410,000 units came out, and that's the same for both materials and conversion. Then I have to calculate out the units that are in ending work in process. I have 37,000 units at October 31. So when I'm looking at materials, I have to calculate out what was my percent that was completed that's getting transferred out. I have 74% on my table. It tells me 37,000 units at the end of the month. And I have 74% that are getting completed and transferred out. So I multiply it by 74% to come up with a number of units that's getting moved out. Okay, so I have my 410 and my 27,380 for my material. Now I need to look at conversion. So I have 410 units that were transferred out for my conversion. And then I need to see what is the percentage that I completed for conversion at the end of the month. So I'm taking the 37,000 units, multiplying it by the 47% that was complete, that's getting transferred out. That gives me my 17,390. So now I have my equivalent units of production for my materials and for my conversion. So I'm adding my materials, which is 437,380. I'm just keying that in. And then the conversion, I'm just adding those two together as well. That gives me my conversion amount, 427,390. Okay, that's my equivalent units. I think we have one more with equivalent units. Okay. I have Superior Micro Products uses the weighted average method in its process cost method system. Data for the assembly department for May appear below. So now it's giving me my work in process in the beginning of the month, my cost that was added during May, and the equivalent units underneath that. It's got material, labor, and overhead. Okay. It says compute the cost per equivalent unit for materials, labor, overhead, and in total. So we're going to add it all together in the end. So we're going to break it out, and you'll have to know how to do this. We're going to break out the materials, the labor, and the overhead. Okay, so we want to start off with what was the cost of the work in process in the beginning of May. So for materials, we had 14,550. The labor was 23,620, and my overhead was 118,100. And then I have to add in my costs that were added during May. 88,000 for materials, the 14,330 from labor, and the 71,650 for overhead. So I'm adding those up to come up with my total cost in each one of those. I take my equivalent units of production, which they've given me for each set. I got 1,200 for materials, 1,100 for labor, 1,100 for overhead. Okay, so now that I have my total cost and I have my units, I can come up with what is it per unit, right? So I'll take the 102.9 and divide it by the 1,200 units. And that gives me the unit, the per unit. So it's 85.75 for my material, 34.50 for my labor, and then overhead is 117.50. And for the total, I just add all of those three costs together to come up with the total cost.
I think I got lost for a second.
Mm-hmm. We can
Okay,
go over it again. We can do it again.
108.
So when you're calculating out, we need to calculate what is my total cost of the material, what's the total cost of labor, what's the total cost of overhead. So all I'm doing is taking my costs that I started with and then what costs got added during the month. I add those together to come up with my total. And they're already giving me my equivalent units. I don't have to calculate that out. So I know my total costs and I know my total units in production. So they want to know what is it per unit. So I have my total. So now I can just add these two together. I get the 102.9. And all I have to do is divide it by the 1,200 units to come up with how much is it per unit.
Oh, I got it now. Okay, you just add each two and divide it. Oh,
yep.
Okay.
Yep. So you're just adding those two together and then dividing by your units. And that gives you your price per unit. You do it for material, labor, overhead, and then add all three together and you come up with your total.
So problem's gonna be like this where we put in cell. I